please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Markets in fine fettle, but for a little bit of red on the big indices. Mid-caps are making up for it, but one stock that, of course, never fades away from the limelight is Ashok Leyland, now in focus after the company extended their deal with Japan's HINO Motors, where Ashok Leyland will utilize HINO's engine technology for their Euro 6 development. Vinod Dasri, Managing Director and CEO, Ashok Leyland, joins us now. Good morning, Mr. Dasri. Thank you very much for joining us. First of all, by when do you expect to be completely Euro 6 compliant, and does that come at a higher cost? If yes, how much higher? How much does it disturb margins?
Well, we already showed a Euro 6 vehicle as a proto at an auto expo about a year or so ago. So we are ready with Euro 6 technology. We even started exporting some Euro 6 equivalent engines to United States. So we are compliant and we know the engine technology. But to test Euro 6 in India, you still need fuel availability and all that. So that is going to take a long time. And to make an entire range of Euro 6 vehicles will take us some more time. We will be ready by April 2020. We will be completely ready. But so what happened here, Lata, is that, you know, originally go ahead.
No, go ahead. Sorry.
You go ahead. Okay. So I was saying originally, as you know, Ashok Leyland and HINO had a partnership many years ago, or decades ago, where they gave us technology for Euro 0 type of engines. And they didn't think we could not much could be done from it. Since then we took it to Euro 1, Euro 2, Euro 3 and Euro 4, and they saw that we were the only ones in the world who were able to take a Euro 3 engine and make it with an inline pump. And then when the Euro 4 came about, we were the only ones in the world to make it with an intelligent EGR system. So they were very interested to say, how can Ashok Leyland be so innovative and also have the lowest cost per horsepower for an engine? So they came to us and said, look, we have a Euro 6 engine. Can you please look at it and help us reduce the costs of Euro 6? So we looked at it. We also found that the engine had an interesting 4-valve design. So we said, we will be happy to help you. We are also upgrading our Euro 4 engines to Euro 6. And here's what we are doing. We have very good, respectable mutual relationship with them. They said, okay, we don't have a Euro 6 6-cylinder engine. How about we develop it together? So that's how it started, and we said, great, we'll renew the old partnership again. They already have a 4-cylinder Euro 6 engine that they are selling in different parts of the world. We will help that become more competitive, and we will together develop a 6-cylinder engine. They won't compete in India, we won't compete in Japan, and it's a mutual relationship. So suddenly Ashok Leyland not only has its own set of engines, but also has a safety net of proven HINO world-class engines, which we will together make them to be much more competitive. So we are very excited about this partnership because, you know, everybody was worried whether we'll have Euro 6 or not. We already had, but with this, it's even 100% sure now.
So there's no royalty that you need to pay to HINO. What would the cost at all be to get into Euro 6, your development cost?
Well, development cost of the engine will anyway be there, which we are part and parcel of the regular development. As far as the ongoing royalty, yes, we will pay them a minor royalty, and they would pay us for a royalty for parts that we have developed and we are exporting from India. So net there is no impact.
Okay, Mr. Dasari, good morning. I know this is not the platform maybe to talk about quarter-to-quarter performance, but I just wanted thoughts on your overall margin picture, because last quarter the market was a bit disappointed by that.
Well, we were the only commercial vehicle company that had double-digit operating margins. We've had double-digit operating margins,
but
for I think
it fell year on year by about 1%.
Yeah, last year in the first quarter, the first half of last year, or during the second quarter of last year, we had two interesting things. One, we had very heavy project orders from exports which were at very high margins. And second, we had a one-time huge impact of VFJ vehicle factory Jabalpur, where we had a price correction pending for the last 6 years, which was paid in one shot. So that gave us a huge bonus. So those two added to nearly about 150 crores. So if you take those two out, our margin performance was not only as good as the previous year second quarter, but actually slightly better.
So, Mr. Dasari, sir, morning.
I know it was difficult to explain this to the market, but
Yeah, please go ahead, sir.
go ahead. I was saying that these one-time things that we had last year are difficult to explain to the market. Market continues to expect us to perform better, and we will continue to perform better. We are focused on our margins. Our market share, even though it has come down a bit compared to last June or this June, we are still higher overall than previous year and continue to show good double-digit operating margin.
So actually, let me take a follow-up question on the margin, since you explained to us the anomaly in the base quarter, Q2 last year. For the year as a whole, what sort of a margin band are you confident of achieving?
I don't like to give out future projections like this, but we have always targeting double-digit operating margins and will continue to focus on that.
Okay, so then let me talk about demand, sir. Because June onwards, the monthly numbers were looking very, very good, anywhere between 11,000 to about 13,000 units. In 1 month, I think it was September, it was even higher. How strong are the truck demand trends now that we're in the second half of the year, and GST is here, and people keep talking about heavy tonnage and more movement of goods?
I think the demand is very strong. Combination of post GST, the GDP is coming back and it's doing well. The tonnage has gone up. The construction, road construction and infrastructure is doing very well. So all in all, I feel the demand is very strong.
Okay. No, I'll tell you where this doubt is
Today
coming
we
from.
are actually constrained for capacity, I think, in certain models.
Oh, that's very good to hear. That actually answers the question I was going to ask you. Going by your August and September run rate, the volume that you put out in October was less. So is that just an averaging, a monthly adjustment, or fewer working days perhaps in October because of the festivals? Should we expect you to resume a 13 to 15,000 run rate pretty quickly?
Well, the run rate will be at that. It's just that we are in holiday period, as you know, Lata. October had a lot of holidays. November had a couple of breaks also. So we are running pretty good right now, and the run rate is, as you say, somewhere in that neighborhood.
Okay, capacity utilization, you touched on that and you said you're running out of capacity on certain models. So is there any capex plan? And if you can give us a little more color on capacity utilization as a whole and in specific models.
Well, in specific models, Lata, I'll tell you that on the 37 ton, if you know that the vehicle that we introduced, it's the world's first 5-axle rigid truck, and it's doing exceptionally well. We used to make about 200 of these in April, and the demand is as high as 3,000 now. So in a matter of 6 months, the volume has just shot up. So the capacity constraints is not internal to Ashok Leyland. We have the capacity to make more vehicles. It's just that on a specific model like this, there are certain components that are not available, and we are resolving through air freighting material and all that, minor things that you have to do when there is a production capacity constraint. We'll get over it, but it's always painful to see that when there is demand, you wish you had more and more capacity. But this is one model where we are struggling to make. But that helps us get more pricing, I guess.
So overall, if you could give us a sense of the utilization level that you're working on, overall capacity?
Overall would be around 70-75%.
So time to do some capex in that case?
No, time to improve productivity. I don't like to just invest in capex, that's easy.
Okay.
We focus on return on capital employed. We try to maintain one of the world's highest ROCE for commercial vehicle companies. We try to focus on north of 25%. And it's not just improving the top line of return, but it's also controlling the capital employed, right?
Okay.
Okay.
No, it's good to hear that. It's just that if you are talking about capex, then we will have to assume the Indian economy growth on a different trajectory altogether. So that's why I was asking you, not from a personal point of view at all. Mr. Dasari, it's always a pleasure having you with us. Thank you very much for joining us today.
No, the capex that we will do.
Go ahead, please.
All right, thank you very much, Lal. No, I was going to say that the capex and spend that our focus is right now is more on developing the Euro 6, getting all the models going on and all that. The government unfortunately has come up with something called heavy duty fuel economy, which we all have to meet by April, which I find quite rather frivolous and redundant, because an industry that competes on fuel economy, why do you want to regulate that? And if you want to regulate something else like scrappage or something of vehicles. And we will spend more on electric vehicles, but that's a subject of another discussion. There will be capex in that sector, but we will use some other time for that.
Oh, but is that coming soon? I mean, that's of much interest because the government wants to change a lot of its vehicles into electric. The rules may come quickly even in other sectors, you never know. If you can very briefly tell us, what is the EV plan?
Oh, we have, like I said, we have three-pronged strategy. We are working very well on it. We have a battery swap strategy, we have a flash charge strategy, and we have a fast charge strategy. So we're working very well with battery companies, motor companies, gearboxes, electronics, all of that. We have a very distinct plan, as distinct from the Euro 6. So it's rather ironic that on one hand we will be working feverishly to develop a vehicle that will be Euro 6 compliant globally, and then equally working on another platform which will completely obsolete this. But that's the nature of the game, and we will we have two separate teams working feverishly at that, and we have to make sure that we are truly world class, not only in Euro 6 but also on the electric vehicle. So, but we could talk much more about the detail of the technology there, but we are very confident of our electric vehicle technology.
Oh yes, that of course will require a special discussion, Mr. Dasari. Thanks a lot.